How does someone invest in an apartment deal? You already know all the benefits that come along with multifamily real estate, and you want to put your money to work in a deal. In this video, I'm going to share 4 ways you can own and invest in multifamily real estate. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 13-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about how you can invest in apartments or multifamily real estate. The first way you can invest in multifamily real estate is to do it yourself. And when we're talking about doing it yourself, let's make sure we remember the real estate matrix. So remember, there's 4 components to a real estate deal. Every single real estate transaction that has ever happened on the planet has all 4 components of the real estate matrix, and I'll put a link right up here to a video I did explaining the real estate matrix in more detail. But just remember, we need the deal itself, we need the capital, we need financing, and then we need management. And remember, when I talk about management, we just don't mean property management itself. We need somebody to underwrite the actual deal, underwrite the strategy, make sure we're doing the right things, what sort of renovations, when do we refinance, if we refinance, when do we sell, how do we push market rents, what concessions do we offer, all of that sort of stuff. So if you're doing the deal yourself, and this is how I started when I started buying single family homes. Lots of real estate investors, when they first get going, they try to wear all the different hats and cover everything in the real estate matrix. So you have to find the property, you have to have the capital, so whether it's $500,000, a couple $1 million, or however big of a deal you're doing. Then you have to qualify and sign on the debt and arrange for the right type of financing, whether you need a bridge loan or if you're going straight to conventional, and then you have to do the management side of the deal. So yeah, you can do it all by yourself, and if that's something you want to do, that's great. The second way is to do a joint venture or a partnership type of structure. Going again back to the real estate matrix, maybe you have the capital, maybe you have $2 or $3 million to put into the deal, and maybe you can sign so you can cover the debt side of the equation, but then you need somebody to bring you the deal and the management. In that case, you can partner with somebody, do a joint venture, and do the deal on your own. And I'll put a link right up here to a video I did explaining about joint ventures and partnerships in real estate. But here's the thing you have to keep in mind with number 1 and number 2. You are active in the deal. So that means if the deal goes belly up, if something goes wrong, if you're doing the deal on your own, you're completely on the hook. That's pretty obvious. If you're in the joint venture, even if you're just bringing the capital and you're signing on the financing, if something goes wrong in the deal, or even if you just bring the capital, some people are under the impression that you're passively investing in the deal. That's not the case. You are 100% active, and you are shouldering the burden or the risk, just like the person who's bringing the deal and managing it. So these are 2 ways: do the deal yourself and do a joint venture. With these first 2 options, you need the real estate experience, you need the knowledge, and obviously you need the time to do the deal, especially if you're owning it on your own or if you're doing a joint venture. This is really time intensive. But what if you don't have the real estate knowledge? What happens if you don't have the experience and you don't have the time, but you still have the money, the capital that you want to invest in a deal? What are your options to make sure your money's working hard in a multifamily or an apartment deal? Well, there are 2 options I want to cover today. The first one is called syndication. We'll call this number 3. And we'll call number 4 a real estate fund. And real estate syndications and funds, they're different, but they're also somewhat similar. And I'll just put a link right up here to a more in-depth video I did explaining the differences between funds and syndications. But in a nutshell, what these structures allow you to do is you have all sorts of investors over here who have the capital, who know all the benefits that come along with multifamily real estate. They want the cash flow, they want the appreciation, they want all the tax benefits, they want the stability, all those things. they have the capital, but they don't have the experience, they don't have the time, and they don't have the knowledge. These investors here can now invest their money in a deal, and that deal is going to be run by real estate experts who have the knowledge, experience, and the team, called general partners. And together in a syndication, they will partner up and they will take down the deal. In a fund, again, just generally speaking for this video, check out the other one for more in depth. In a fund, same type of situation. You have the passive investors, the limited partners, then you have the general partner. And the passive investors, the LPs, will invest into the fund, and then the fund will go out and acquire and sell properties on its own, and the fund itself will grow, and that's what the investors are investing in. There are pros and cons with both syndications and funds, so check out the other video for a more in-depth analysis. But what does this mean? Well, because of the structure involved here, these investors, they're passive, and they are completely passive, meaning that yes, they're bringing their capital into the deal. Yes, they're risking their capital just like they would with stocks or any other investment, but they're limited in their liability in that, you know, if doing it yourself in the joint venture structure, you're on the hook if something goes wrong. The lender is coming after you, and or the tenants, you can get sued. But with this structure here, you are protected under the law. So you are risking your capital, but the general partnership here is shouldering the risk that comes along with managing the deal and all of that sort of stuff. So if you're someone who's interested in passively investing in a deal, but you don't know where to get started, you don't know what separates a great deal from a good deal, you don't know what to look for in a general partnership, you don't know how to get started building a passive real estate portfolio, I want to invite you to check out Discover Multifamily. This is an 8-week course that I've developed that will take you step by step through the entire process and really make you more confident in investing in multifamily real estate. It is specifically designed to take you from the very beginning, from starting from scratch with your real estate portfolio, and take you all the way through, and by the end you will be able to invest confidently in a multifamily deal. So go to discovermultifamily.com to check out more details on that course. But if you're looking to invest in apartments or multifamily real estate, you really have 4 options. You can do it on your own, which is great if you have everything involved in the real estate matrix. Then you can joint venture with somebody if one person brings the capital and the financing, and then the other person brings the deal or the management. But if you really want to really maximize the impact your money has, you can invest in syndications, because you only need to bring your capital into the mix, and then true real estate professionals will manage everything else and make those real estate decisions to make sure your money's working as hard as possible, and that's through syndication and through the fund structure. And if you're interested in learning more about multifamily real estate, join our free Facebook group. I'll put the link right down below. We've got a great group of people who are really interested in helping others. And if you are an accredited investor and you're interested in learning more about the deals I'm currently looking at, head on over to callseth.com and set up a free 20-minute phone call with me. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think. It really helps out the channel. And until next time, happy investing.